Good afternoon. It is Halloween, October 31st. Mike and Corey coming to you live on this red day. So today I'll hit a real quick. The markets are in the red. We'll explain why, or at least explain two of the key positions that are causing it. Talk about inflation as well. And we got to sport some Halloween swag here. So I'm walking back. And I'm telling Corey, I got your back. So you can see I got your back, Corey. This is my Halloween shirt for this year.
Mike, what do you think? Are you big into any scary movies this time of year?
Oh, so, I guess I've seen so many scary movies over my life. I did read an article in I think it was the Wall Street Journal, but they talk about rating scary movies based on how much your heart rate goes up. And I
Mm.
followed those and I watched a couple and they were scary. My heart rate did go up. So,
Wow, wow.
to me, a scary movie is like, a company I love reports bad news. That would be a scary movie to me nowadays, but no, I'm just kidding. How about
No
you? Are you
kidding.
into scary movies?
Oh no, I don't seek them out. But my first scary movie I watched was on accident. I was a little kid and I was watching TV, flipping through the channels, and there was a boy carrying a toy box with a doll inside. And I was like, oh, that looks fun. And then next thing I know, the doll's coming out of the box, and it was
Chucky.
Chucky. So,
There you
yeah, that
go,
was
Chucky.
yeah, but it was. I wasn't looking for a scary movie, and I found one.
I think I watched one. It was really scary with my daughters. It was about this like princess, or she was in charge of the whole country, and she was like freezing people, and she kept singing like "Let It Go," Frozen. I don't know, maybe. Ah, come on
Ah,
now. Okay,
woo! You turned the tables.
before we have all the Disney lovers hating on me for that comment there, but I will say this is a financial education presentation. You must do your own due diligence on anything heard in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone on stocks and movies, right? Frozen really was not that scary, but anyways, all the stuff I bought because of Frozen, now that was scary. Um, Let me show you real quick. If you're following the markets today, we're doing this in the afternoon. The markets are in the red. There's a little bit of sell-off, but I do want to point out some good news in this too. So when we see this red and we're like, oh no, counts are down. Don't look at your counts. They are definitely down. If you're in an account and your stock or your account is overall up today, um, I'm not sure what you're invested in, but most things are down substantially. The NASDAQ, which we're heavy into, is down 2.4%, due to mainly to both Meta and Microsoft earnings, which Corey and I are going to cover. But I do like to point out a good side of this. So the Russell 2000, which those 2000 stocks, is only down 1% right now. And I'm actually going to pull up, this is on the fly, EQWL, which is the equal weight 100. This is only down 0.44%. So this is the top 100 stocks at 1% each is only down 0.44. And you might say, wait, how can the NASDAQ be down 2.4 and the S&P 1.4? This, even though this is down, this indicates there's some cost shifting into stocks beyond the Mag 7, which is something that we expect and is healthy for the stock market to move just beyond those top stocks. So if the overall top stocks are down 2.5% and some of these other stocks are only down 0.44, that indicates a cost shift. To me, when I saw this, and a lot of you have EQWL in your portfolio, this is a good sign, even though it's down. Yes, it's down, but to me, this is good news, and this just means a broadening out of the market. Other, key news came out: inflation rate 2.1% as expected. So that's good news. That means the inflation, if this thing goes up higher, then it limits the Fed's ability to cut the discount rate. But came in as expected. And if it goes too low, then they could indicate the economy slowing faster than expected. The other numbers is a big number. It's going to come out tomorrow is the jobs number, and I'm sure we'll mention that on tomorrow's show. So the stock that I'm going to cover is Meta, or Facebook. There's a big picture of Zuckerberg. But overall, they came out they beat earnings, they beat some things, but they also, the people that were active, only 3.29 billion active people in the third quarter, which is less than the expected of 3.31 billion. I mean, it's a lot of people to be active on Facebook. So that's kind of what caused the stock to go down. When we actually look at the earnings per share, they beat $6.03 versus $5.25. That's a pretty good beat. Revenue, they beat it 40.59 billion versus 40.29. So really, it's just the user base. That's what caused that to be down. Meta is in most of our models, or at least the more aggressive models. And Meta is certainly, a solid stock and company. And none of these earnings, this quarterly report card, none of this causes me to panic or like, oh my gosh, like, oh, Facebook is falling apart. It's not. So, anyways,
Their
but I will.
margins year over year are much improved. I forgot the exact number, but yeah, they're definitely operating in a very efficient way. And there's really, regardless of what the stock does here, there's not a concern about the strength of the underlying business.
Yeah. And one thing that Zuckerberg pointed out is they are putting a lot of money into artificial intelligence, which is smart. I mean, keep in mind, Meta's primary model is advertising. I mean, if you don't pay for a product, it goes like this. If you don't pay for a product, then you are the product. So, anybody that's a user of Facebook, your eyeballs are the product. So, and they're using AI to be more efficient at that. When we look at Meta's overall stock, certainly, looking at the day, that looks ugly, big drop off, but let's look at the year to date. And the year to date is, if you just step back and look at the year to date, that's a pretty good chart. It's up substantially, but it's sold off back in April, and that's when we really added it to a lot of the portfolios. So it's up significantly and still a good stock. So that's Meta, but that is one of the two reasons why the market's down today. I mean, there's probably lots of other reasons, but the two big ones are Meta and Microsoft, because they are such a big component of the S&P 500, and as certainly the NASDAQ. So with that, I'll turn it over to Corey, and he'll cover the other one.
Yes, sir. All right, I'm going to first just give a review of that. Kind of the overview, similar to Mike from CNBC. So, earnings better than expected, revenue, pretty big beat there on revenue over what was expected, $1 billion above what was expected. Revenue increasing, mid to high teens there year over year from the same quarter last year. So everything is humming along. The business is thriving. The business is doing great. So, of course, the stock was down, 5% today. I want to show you a little different look. So you can go to, this is a heat map for the S&P 500.
It's hot. And that's a lot of red. That's hot.
Well, hold on. This isn't the returns from today. That would be here, the one day. This is the PE ratios. So let's kind of go over here and look at Meta. Well, Meta is trading at a 29 PE. That's certainly not egregious. Also not dirt cheap, but definitely nowhere near a bubble territory at that level. Microsoft consistently trades at a higher earnings multiple, and Google usually trades at the lowest earnings multiple. Now with Google, there's some perceived kind of existential threats to their business. I think ChatGPT released a search engine today attempting to compete with Google. And there's also government kind of litigation risks against Google. So there is some concern kind of baked into the valuation of Google. And that could be an opportunity for investment, right? For us, if sometimes those fears don't materialize, and if that's the case, you could see some extra capital appreciation in Google as it sort of kind of reverts to the mean with these other Mag 7 names. But, Meta's right there. Why does Microsoft trade at a premium above Meta, similar revenue growth, and Google also similar revenue growth, and of course, equal strength in the business. Well, it kind of comes down to this. So let's, if you know me, you know I'm pulling up the earnings report. Here's some different income segments for Microsoft, and we'll look at the segments in a minute, but look at these revenue growth rates year over year. You've got almost every revenue segment is growing double digits, and one of the most profitable, fastest growing will be the biggest, if it's not already, is that cloud service growing at above 30% year over year. Let's look at this another way. You can see just how diversified Microsoft's revenue streams are. Microsoft is not dependent on any one revenue stream. And where it really gets a more premium valuation than a Meta or a Google is because they don't depend on advertising revenue as much as Meta and Google. Now, if in an economic slowdown, Microsoft's revenue streams are a little more bulletproof than Meta and Google. If ad spend falls, during a little economic slowdown, Meta and Google will be more negatively affected. So they're more dependent. So the market views it as slightly lower quality than Microsoft. Just wanted to lay that out there.
Leave that up, because one thing, leave that chart up there. I like that a lot, because there's some really cool businesses within Microsoft. So if things slow down, which they are slowing, but even if we went into a recession or anything like that, I mean, it's not like businesses are suddenly going to be like, hey, we're getting rid of Microsoft Office. But what I like is, even within that, you have LinkedIn, which, guess what? If the economy slows and there's more people looking for jobs, I'm going to guess that LinkedIn is going to make more money, because that's, like, to me, that is the number one software you'd use to find a position. Throw in Xbox. I mean, addictive subscriptions. There's, lots of adults, but there's certainly lots of kids that are using Xbox. So, I mean, I do like that. This is certainly multifaceted revenue coming in and profit. So, I can't even imagine. Remember the old days of, you wouldn't even know, Quattro Pro and WordPerfect, and there used to be alternatives to Microsoft Office, and now the only alternatives that you mentioned, Google Sheets and some of the Google free products, certainly not as in depth as Excel or Word.
Yeah, but no, you're right. They're viable alternatives, and certainly commendable, right? Commendable products for Google to offer. And Google has a lot of kind of a venture capital arm that they've invested in a lot of growth kind of speculative plays and companies out there. So, my personal belief is that you'll see a reversion of Google's valuation, and some solid capital appreciation there over the coming years. And, Microsoft is going to be just fine.
Yes. And talk about earnings, that's 3 of the Mag 7. 2 more come out in the next 45 minutes. Apple and Amazon earnings will be out. We'll see what the market does tomorrow. So I'd say, of the 3 that have come out so far, Google, all 3 of them have exceeded earnings and revenue, but Google stock popped 6%. And Microsoft and Meta have dropped a little bit. We'll see what Apple and Amazon do later today and in the markets tomorrow. But keep in mind, the job number will come out as well. And oh, by the way, there's that small event next Tuesday that happens every 4 years in the election. So, overall, we're going to see some market volatility. There could be some little bit of profit taking right now because the uncertainty with the election, but hopefully next Wednesday we'll have at least a closer to some certainty, and the market will get some clarity on where we're going. So with that, Corey and I, or Steve and I, somebody will be back tomorrow. We'll be talking about Apple and Amazon and the jobs number. I'm sure those will be our 3 topics for tomorrow. Have a good one, and happy Halloween. Don't eat too much candy. We'll go out and buy some sugar, right? I'm sure the commodities of sugar will be up tonight.